It's arguably the biggest corporate action this week. Two Rivers Business Park's Special Economic Zone designation following a Gazette notice by Trade and Investments Cabinet Secretary, that is Moses Kuria. We're delighted to have James Mworia with us on set. James, karibu.
Asante sana. Good morning.
Good morning to you, James.
Thank you.
First of all, many Kenyans are still wondering, what's this all about? What does this mean?
Yeah, so this is, it's Two Rivers International Finance and Innovation Center. It's under the Special Economic Zone designation. So Special Economic Zone is not a new concept in this country. The Act has been there since 2015. And there are 24 gazetted Special Economic Zones. Up until now, most of the Special Economic Zones are focused on goods, on manufacturing. This is exclusively focused on services. So if you look at the Act, there are various activities that can be conducted within a Special Economic Zone. There's manufacturing, logistics, but there are also business parks, IT parks, convention centers that can be part of a Special Economic Zone. And so we looked at what was government's interests and agenda around promotion of employment and exports of services. And we aligned our property to meet the needs that they had and the interest that the government had, their intention. And the advantage Two Rivers presented is that it's a plug and play. The land is in place, it's in an excellent location, the infrastructure is all in place, and the Act also requires you to have amenities. So for a zone to be gazetted as a Special Economic Zone, especially where you're dealing with services, you should have the enabling social amenities. So for example, if it's housing, by the end of this year, we'll have about 900 houses that will be completed. Shopping malls, offices, hotels, schools, etc. So that's what it means. So it's a Special Economic Zone for services. It will create an environment where businesses that are largely export-oriented, because it's a customs zone. So if you come here and you're supplying Kenya, for example, the rest of the country, you're not going to be competitive. But if you're largely supplying the region and internationally, then you enjoy a variety of fiscal benefits. This may be corporation tax is lower, withholding taxes are lower, ease of access to work permits is easier, and for Two Rivers will then provide the physical infrastructure, the offices, etc. And you can either lease from us or you can buy from Two Rivers. It's called Terrific, TRIFC. So the E is not there. Although it's not written, you say it, so it sounds terrific.
Okay. Yeah. So James, you've argued that Two Rivers offers a plug and play, and I'm looking at this from the business case for Centum. Yes. And for a long time, you and I have had a conversation about TRDL, scouting for a strategic investor, they're hoping for dilution. COVID happens, a number of disruptions happen. Is this almost what you deem to be now a silver bullet?
Yeah, so you see, TRDL was a joint venture between us and a different set of partners. And in that business, we were seeking, that particular entity was seeking a strategic partner and a way to address the balance sheet challenges it was facing. And Centum is that strategic partner. So in a sense, we've acquired the asset from TRDL. And through that acquisition, it's now, then we've pivoted towards creating it into a Special Economic Zone. So we've addressed the issues that TRDL had, and at Centum we're now pioneering this business line.
That's interesting. Allow me to seek a clarification here. So on the one hand, at some point you are hoping for dilution. Here you are technically, really, rather not technically, you have bought the stake. You bought the asset.
Yes, we bought the asset. So, because what we were communicating was what was the interest of that particular entity. And what that particular entity wanted was to seek an investor in its assets. And we saw an opportunity in acquiring this particular asset and using it to create an international financial center. So if you look at DIFC, Dubai International Financial Center. It's about the same size as the Two Rivers, just the same size, about 100 acres. And here we have an opportunity to build about 1 million square meters of development bulk. And if you look at, there's a huge global trend around offshoring of jobs. There's a shortage of talent in developed countries, and that's not going to reverse anytime soon, because the increase in population, the population growth rate, is now lower than the replacement rate of those populations. So if you look recently, I think it was 2 weeks ago, there was a report from Italy where the COVID rebuilding program had slowed down because they did not have enough skilled architects and engineers in Italy. And the right-wing government in Italy is anti-immigration. There's also a digital revolution where jobs now can be done remotely. Now, couple that with the various trade agreements that Kenya has gotten into, whether with the EU or we are negotiating with the US and various other places, plus our human talent, plus the fact that Kenya is one of the most attractive places for even expatriates to live in, then you have an opportunity where you can use this as a platform where companies can offshore their jobs here, and we create a platform for creation of jobs and enhancement of productivity of human capital. So in a sense, we've reimagined our business in the context of the current global and domestic economic circumstances and where government policy is. And we provided, to my mind, the most immediate solution, because any other solution would be probably 5 years out. The amount of money you need to get to where we are and finding a site and building out the infrastructure will just take too long. But where we are, you can go to market immediately, and we've already gone to market.
Okay. Allow me to push this a little further before we continue the conversation about the financial center. So you've got the purchase of the asset on one hand, you've got a share buyback running on the other hand. How is your cash position?
No, actually, it's very good. It's very good. We had an objective to reduce debt. If you recall, last year we closed at about 4.3 billion. I think we closed the year having reduced it by 50%. The share buyback is progressing well. We started off in February.
4 months in now.
4 months in. The objective was to provide our shareholders who wish to sell with an opportunity to have a buyer without a significant market impact on the price. You don't want to have to sell and suffer 10, 15, 20% discount. And also avoid our existing shareholders having to suffer book losses with a declining share price. And so we've sort of been an underwriter. And the price has been relatively stable, which was one of the objectives we had. And so that is progressing well. And we've also made good progress in completing the acquisition of this asset. So it's coming along. It's coming along nicely, I must say, despite a very tough economic environment.
Okay. For those of us who are quite familiar with the real estate side of Centum, book building has always been a big thing, especially when you're developing units. The offtake must be guaranteed, etc. So now that you are now in this financial center space, what sort of appetite are you already receiving, if any?
Yeah, we've a lot of appetite now for a commercial space. As you know, the commercial office market segment in Nairobi has been depressed for a long time. That space is driven by enterprises. Our estimation is that we should be able to attract at least 40 enterprises a year at around 1,000 square meters per enterprise. So we should be able to be building at a rate of about 40,000 square meters per year. We have 1 million square meters, so we can be building for a long time without the need to acquire more land.
You've got capacity.
Yeah, what this has done is that it's essentially expanded our market from Kenya. Our market is global.
Correct.
And any global enterprise that wants to seek a home to set up. And Kenya has a lot of advantages. We've done a benchmark between Kenya, Dubai, Mauritius, Joburg. If you compare us with Joburg, our labor policies are a lot more flexible. Our environment is more friendly, and we don't have the power shortages issue they have. If you compare us with Dubai, the cost of living here is significantly lower. The weather is a lot more attractive. It's a central location. We've not really had, as a country, first, we've not really focused on services, in my view. And this is one area where Kenya has a significant competitive advantage because you're dealing with human capital.
Yeah.
If you look at the challenges in manufacturing around power, around so many other issues, those are not easy things to address. But in services, you have the human capital, you have the digital connectivity, you have a very advanced financial services sector, you're very centrally located. We're already home to some of the large international organizations, UN organizations. So it's a space where you're playing to a nation's competitive advantage. You have the location, and now you have the need, because you have countries facing shortages of skills, and they need those skills. And it has come at a time when now the digital transformation has enabled jobs to be offshore, to be done remotely. So I think the pivot could not have come at a better point, and you have an enabling government policy where the most pressing need today is to address the issue of employment.
Yeah.
If you look at one of our target sector is the BPO industry, business process outsourcing industry.
Yeah.
In the Philippines, it employs more than 1.2 million people. So these are some of the sectors where you can create a lot of jobs. And we are graduating 1 million graduates a year.
Yeah.
I'm Chancellor of Machakos University, and I'm always concerned where will all these graduates go.
Yeah.
Now we are creating an opportunity for them to get employment. And as they get employment, they are contributing in payroll taxes and now housing levy.
Yeah.
So we are recruiting new taxpayers, and therefore you're addressing the fiscal deficit side of things. And then also contributing to the current account, because these are export of services,
Yeah.
which will be paid back in
hard currency.
In hard currency. So I think we are playing in a space where we have a natural competitive advantage, where the challenges you're facing in other sectors, whether it's cost of power, shortage of foreign currency, logistical issues, are not applicable.
But James, to be fair, the counter narrative, when you do a comparison with Two Rivers here, DIFC, Joburg, etc., for all the disincentives they might have had or the challenges they face, those are not markets where you wake up one day and the incentives extended are being reversed. That is something we have seen in the recent past in this market.
Yeah.
Never mind, it was grounded in law. So don't you think that's a downside here?
So I think there's two kinds of incentives. The incentives that are granted through administrative action of, say, a cabinet secretary, granting exemptions. These are administrative incentives are not necessarily grounded in an act of parliament. Now, the SEZ Act and the incentives within the SEZ are in acts of parliament. They're in different statute books. So the way to reverse them is through an amendment of the law to remove them. So it's not as easy as where you, through a stroke of the pen, Julian Zamboko is now the CS Treasury, is granted James a tax exemption. That's not how the special economic zone regime works. It's a bit different. But ultimately, even for us as developers in this sector, our license to exist are three things we are focusing on. How many jobs are we creating? Because as long as we can bring enterprises here that enable Kenyans to get jobs, I think we have a license to exist, and it's a sector that should be encouraged. How much in taxes are these people contributing? That's another important metric we are looking at. The ability to spur technology transfer and innovation by hosting tech companies here, because innovation and these professional companies are a way of diffusing into the economy.
Yes.
And creating an ecosystem and moving the whole economy forward. And then how much in foreign currency can we be able to be bringing into the country? Once you're able to do those three things, then you are an important contributor. And I think our ability to demonstrate that this is an important sector, and as government you can achieve quick wins by supporting us to go to market easily, is part of what enabled us to move quickly along that path to gazettement, and enabled Special Economic Zones Authority and the CS in the Ministry of Investment, Trade and Industry to fast track our application. Because then, even as you negotiate treaties with different states, you must ask yourself, what will I sell to them? And do I have the enabling conditions
Yeah.
to have something to export, or will I merely be an importer? And so what we are doing is positioning the country to be in a better place to be an exporter as well. As much as we will buy, we should also be in a position to export to those markets, and for the Kenyan people to really feel the benefits of some of these initiatives that are taking place.
Okay. What's the interface between Two Rivers Financial Center and the Nairobi International Financial Center? Don't you see potential competition
so
there?
it's interesting. The Nairobi International Financial Center Authority, NIFCA, was set up under an act of parliament. So there's a NIFCA Act. NIFCA is not a physical construct. It's an abstract construct. The idea was about creating Nairobi as an international financial center in the abstract. Special economic zone is a physical customs zone. So it is a physical territory.
Yeah.
And within that, you can set up a business park. Now, once you set up your business park, you can then decide what you want to focus in. For example, so there's nothing prevents you from focusing, say, on financial services companies within a special economic zone. So actually, we are collaborating with the NIFCA, and there are a set of incentives within the Special Economic Zone Act. There are a set of incentives within the NIFCA Act. So we've been in close discussions with the management of NIFCA on how we can support them. Actually, it's a great win for NIFCA, because the NIFCA entities, if now they are domiciled here, they can enjoy both the incentives under the NIFCA Act and the incentives under the SEZ Act. So before they would get inquiries, but they had really nowhere to house these particular individuals. So I actually see us working very closely with NIFCA as far as the financial services entities are concerned. I would just like to add what we are focusing on. So we are focusing on business process outsourcing entities.
Yeah.
And those we have a distinct work stream. We're focusing on tech companies. That's another distinct work stream. We're focusing on financial services entities. We are speaking closely to NIFCA. Then, of course, with that comes now professional entities, HR, law firms, consulting entities, because you then have to create the enabling environment. The fifth one is funds. If you look at many funds that invest in Africa domiciled in Mauritius, if you look at just the quality of our financial services sector and the quality of our professional services in Kenya, I think we are further ahead of places like Mauritius. It's a lot deeper. I think there's an opportunity for Kenya to take a leading role where capital, FDI that is flowing to the rest of sub-Saharan Africa can be domiciled from Nairobi. And so some of the engagements we're having through the ministry is to review the capital gains tax issue, so that then we can be competitive as far as attracting, making Nairobi a hub for investment. We're already as a country investing a lot in regional peace initiatives, whether it's in Sudan, in Ethiopia, in Congo, but I don't think we're getting the commensurate benefit of investment into those countries flowing through Nairobi. And would like, just as diplomacy is flowing through Nairobi, would like capital to flow through Nairobi, and in that happening, that will create a lot of opportunities for professionals such as you and I.
Yeah. So James, even as you speak about the environment we have in Kenya and the potential of attracting funds into this market, one of the things which I've struggled with the Kenya Kwanza government's debut revenue-raising measures proposal, that is the finance bill, is the proposal to have transfer of businesses as a going concern subject to VAT. And this matter has been discussed, and the chairman, no less, of the Finance and Planning Committee says the government targets raising 100 billion shillings from this annually.
Yeah.
And the question is, just how do you attract them if that's the kind of approach you're taking? Do you have reason to be as bullish as you are?
Yeah, it's a it's a chicken and egg situation, because if you look at it at the macro level, I was at the Africa CEO Forum, and I attended a forum where there were the IMF and other speakers were there, and credit rating agencies. And when they speak about Kenya, the conundrum with Kenya is the decline in the tax to GDP ratio. Is that even as the GDP has gone up, tax collections has come down, and you have a growing fiscal deficit. And part of the expense side, you can't do much about it. It's around debt service.
Yeah.
and debt default is not an option. So as government, you then have to look at all manner of measures to increase that tax to GDP ratio, so that you can balance your books. And some of the measures are not comfortable, but I think we don't have a choice because we are where we are. I think tax to GDP is something around 16%. It used to be close to 20%. And I think what Kenya Council is trying to do is to push that tax to GDP to closer to 20%. So that even as you speak about a refinance and you say, look, invest in our new Eurobond issue, you can give investors confidence that you have the tax revenues to refinance. So I think, I always tell my son, choose your pain. There's no painless option.
Yes.
It's either we pay more taxes or you go down a path that Zambia and Ghana have taken.
Yeah.
And those paths, the pain lasts a lot longer. And the loss of agency is very, very, very significant because you just be totally locked out of the global capital markets, not just the government, but all entities operating within that jurisdiction. So I think you can disagree on the tactics, whether it is a capital gains tax on business, whether it's a housing levy. I think those are more tactical issues, but directionally, I don't think we have much of a choice. If you are the one who was the CS in Treasury, I doubt you'd be having many alternatives.
Yeah.
And I think also the challenge with a lot of us is that we are quick to criticize without offering alternative suggestions. Say, okay, rather than impose tax here, then impose tax on this other element. I think it's important for individuals to come up with constructive ideas. So for example, for us, our constructive idea was, if we get this licensed and we create new jobs, we are creating new taxpayers.
Yeah.
So we're actually helping you resolve the fiscal deficit issue. I wish more businesses and individuals saw this as our collective problem and then said, how can my business align in helping the nation address what is a collective challenge? But I think it's a passing challenge.
Okay.
Yeah.
James, I have to ask you this question. Many skeptics have said that the office of the CS, Trade and Investments, is domiciled where we are, and that could principally be the reason why you have managed to secure this gazettement. How do you respond to that?
I think that question has been posed to the CS himself, and I think the point he has made is that he wants to give investors a world-class experience. When you go to many parts of the world and investors, you're engaging with parties where you're negotiating trade agreements, you're meeting in fairly first world environment. And it's fairly an aspirational individual. I've had the pleasure to know him personally for more than 20 years. And in fact, our last meeting in Dubai, he bought me a lunch about 4 years ago, was at the DIFC.
Yeah.
And so he has an idea how he wants investors to perceive this country. Because first impressions are very important. Imagine you're having a trade negotiation with a group, and then they get stuck in a lift. Or they go to the toilets and they don't work. Small things like that,
they matter a lot. And he wants to present his country in the best possible light. He also wants to negotiate from a point of strength. Remember, MITI owns a quarter of Centum through KDC. True.
So he wants to be able to tell investors, this is ours. This is ours and the Kenyan people, because what they don't own is largely owned by the Kenyan people through the Nairobi Securities Exchange. So it's part of, it's a positioning. It's part of a negotiation. I have had feedback from some of the diplomatic missions that have come to meet him here. And they come in and the way they thought they were going to engage, when they arrive, they change their position because they realize they're meeting with a country of substance. So I think as a country, we should work collectively. I think what he's doing is great in terms of working with government and private sector collectively to put the best foot of the country forward. Where he sits is irrelevant. If there was a better office than this one at Two Rivers, that's where he should be. He should be in the best possible office because he's the one who is charged with the responsibility of negotiating our most important trade agreements that will give us market access, that will drive FDI into this country, that will create employment. So we must project our best face to the outside world. And if we can play a role in that, it's a role I'm very proud to be part of.
I see. Yeah. Going back to the Africa CEO Forum, where you are, and you made very strong comments around the FX position, what it means for corporates, and what you think should be done through entities like a Brexit Bank, etc. Considering what is now happening here with the financial center, just how much do you think a successful rollout of this would recalibrate that?
Yeah, you know, if you look at, and that's a point I was making, we have run a current account deficit for a long time. There are various measures being taken to reverse that current account deficit. Part of what you're trying to do here, in a small way, is to reverse it by increasing the portion of service exports that we are making, because that will then generate hard currency.
Yeah.
There are also measures being taken to reduce the imports of non-essential commodities or to discourage them through imposition of various levies. So it just becomes more expensive. Then you can balance that current account deficit. So there are measures around the current account. But for a long time, we've not had a problem because you've had a capital account surplus.
Yeah.
The capital account surplus has largely been hot money. Because of the low interest rates in the US, that money has found its way here. But that money has largely been short-term money.
Yeah.
What a financial center should ideally help is bring stickier money through FDI being channeled through Nairobi. If that money comes through Nairobi, and then it's going to Uganda in UGX, going to Congo in their currency, going to Ethiopia and the rest, and we are supporting the entire region, then hopefully you can start rebalancing the equation. The fortunate thing is that as a Kenya, we have an inherent comparative advantage in some of these areas. If you look at the World Economic Forum Global Competitiveness Index on measures like the quality of our financial system, I think we're in the top 30 in the world. You'll be surprised. We're one of the top. If you look at business sophistication in Kenya, again, we're in the top 30. We're like in the top 3 in Africa. We're in the same league as Mauritius, South Africa, and Kenya.
Yeah.
So we have certain competitive advantage, areas of competitive advantage that we can leverage to turn around the situation. I don't think it's a lost case. I think it's just a question of us focusing on areas where we can enhance the productivity of our people. If we have an additional 1 million people in employment, and probably even earning their money in hard currency,
Yeah.
then you start reversing this situation. So I think it's not one step. It's a series of different steps taken in concert that will lead to a rebalancing of the situation. And of course, is what is not in our control, which is now encouraging, which is ultimately a reversal of the increase in interest rates by the Fed. They have paused it. My hope is that inflation will come under control and we'll start seeing a decline. If you see a decline, then you'll start seeing the capital account reversing.
James, let's get to the close of our conversation. You mentioned the KDC stake in Centum, and I had the privilege of seeing a deck pitched to investors by KDC, and potentially one of the entities that could be divested for private investors' uptake is Centum Re. How much headroom do you still have before you go to market with Centum Re?
I think, I had an opportunity to seek clarification from KDC, and they explained that what they were seeking were investors into the investment opportunities that are being created by their portfolio company. So Centum Re has obviously room for investors to come in because they're in a fairly capital-intensive space, and there's a lot of growth there, and we are looking at it being a regional company. So KDC is assisting Centum Re attract investment into that line of business. We're also engaging with government on a number of their projects in the housing space, and so obviously you need capital into that. And I think we're also mentioning potential investment opportunities in Terrific, which at the time had not yet been announced, had not yet been gazetted, but it's obviously something we've been working jointly with the ministry itself and our shareholder KDC and ourselves. So it's something we've been working on for a while. So I think that was what was on their deck. There were interesting potential investors with investment opportunities that will be presented both within Centum Re and in Terrific.
Never mind, sometime last year there was a big announcement from Centum around potentially listing this entity outside.
Yeah, but you see, market conditions now are not favorable. Equity prices across the world have fallen. So I think the market conditions is not ideal for such an action. I think that's an action one has to delay and wait for the market conditions to improve.